How's everyone doing? Hope you had a great holiday. How's my team? I hope that we're good for a tie.
Hey, good morning. Good morning.
Hey, hi, how are you, KMan?
Yeah, good morning, Dale. How are you?
Pretty
Hope you had
good.
a good Thanksgiving and all.
Yeah, but and watched a lot of soccer. Really enjoyed it.
Oh, good.
Yeah. So we haven't said this in a while. When's the last time you can remember saying strong euro, weak commodity currencies?
Yeah, we talked about that on the Flow Show.
But it's been a while, right?
There's a lot of end of month stuff going on, I think, in the euros. All euro pairs are higher. But as I was saying on the Flow Show, in former years correlation, if you look at euro crosses, they tended to do better when it was risk off. So it seems that this kind of correlation was playing a part in today's market. So, but I think
that was a while ago, right?
And it is a while ago that those correlations got thrown out of the window.
You know what else is a while ago? When's the last time you can remember a weak dollar and a weak S&P?
Yeah, I think is that the recession trade that people are trying?
I'm just noticing price action that I haven't seen before. And usually, you know, when you see a shift like that, I mean, a lot of people think, myself included, that, you know, weaker dollars risk on. So when it's not doing it, I pay attention to, you know, that, you know, what would normally help the market isn't. That's a problem for that particular market.
Yeah.
So that's the way I see it.
It's it's a big data week as well, and
yeah.
Powell is to speak, and as I said, the end of month flows are in full swing right now. We're trading value data end of month, so those could be behind it as well. And then you got a bit of China in there, which has been weighing on the equity market.
What are you doing with the yuan?
I'm still long dollar yuan, but I'm as you know, I'm trading it around. So I was pretty fortunate that they took it quite a bit higher overnight, so managed to get a 725 for a part of it, and now I'm waiting to see if we can get it back a bit lower.
Yeah. Okay. I mean, maybe it's a right shoulder, or maybe it's going to blow one more time.
I'd be happy with a 730 print on this round in the dollar China. But then afterwards we'll have to see. The PBOC is interestingly still putting the dollar yuan fixings a bit higher, although not at market, but still, I mean, quite close to what the models are saying. So they fixed it around 716 today, which is already a good marker if we get back down there.
Okay. So Canada, you know, it looked textbook, but, you know, I noticed last week when the dollar is pressing its lows, this is just a shallow pullback. And if we start taking out 135, just a measured move would be 38 up here where Blake has some alarms or someone has alarms. So this is showing, you know, a lot of weakness because other dollar pairs were, you know, the yen was testing the low, yen took out the low. So Canada is, you know, kind of, is it a message about the dollar, or is it?
Well, I think so. If you look at well, dollar max hasn't really moved a lot, but then dollar Canada moved up quite a bit. I think that mostly has to do with lower oil, lower gas prices, and the correlations are back there. And then yeah, if you talk about risk in the US per correlation, people will sell Canada as well, and it's all one pot, right? One melting pot.
Yeah. But they're all, you know, they're not trading in unison. So
no,
this was a big move last night, right? And it looks like, you know, someone was looking to buy it a little bit under recent levels, or anyway, I could tell by where the alarms are. I thought they'd take out those stops first under 84.5, but that's a pretty nice turn.
No, I think this mid to high 85s is a pretty decent level on the euro sterling.
Yeah.
We traded off that start of last week's end of last week, so it was a welcome little jump today to take some off, and now we see what happens into the end of the month.
And metals still struggling. They tried to rally after being lower last night. You know, silver weaker than gold. I still believe that this wedge is going to manifest, even if it takes one more trip down, but it doesn't have to. And then the last thing that I was kind of thinking about was what could surprise the market. I think most people think that, you know, rates have peaked, at least short to intermediate term.
Yeah,
but you know, one number like the PCE Thursday, and we could be at new highs in yields.
Yeah, but that's the thing, right? This week is packed with data, and then Powell will talk. So the market is on its toes, and really, it's going relatively fast. If you look at dollar yen, we printed a new low this morning, and then we're already nearly a big figure higher. So things are going relatively fast. Market is nervous. I look at the option FX option volatilities. It's for a retail trader, it's very tough to put anything serious on the books right now as well, because
the premiums are too high.
Sorry?
Premiums are too high.
Yeah, prohibitive at some stage, and not only premiums, but even the spread. If of course, the shorter term, as I said, since the volatility is high, the market for retail traders, at least, they're trying to take advantage of it just by widening spreads quite a lot. So it's a bit tough to trade them. But okay, with the volatility, it's still there's still some stuff to do from time to time. But it does reflect what the nervousness in the market, because if you talk, if you look at the euro dollar vols, the 1 month euro dollar trading in 11.5 is still quite high, right? So that for instance, and then not to speak about dollar yen, which is trading around 14, 15. So yes, those are that shows that the market is still very nervous.
Okay, I think Apple holders should be nervous too. I want to get it's good to be nervous. It really is. It's not healthy. So just be calm, like my voice is, not like my internals are. Okay, so want to get Ryan in here.
Morning, mate.
How are you, buddy? So
all good. Nice break.
Yeah, nice break. Ready to, you know, look for some things to do this week. Your impressions this morning?
Yeah, it's going to be a real busy one, I think, this week. Lots of stuff going on, so lots of two-way action, I think. If I had to pick out a couple of things, it's really going to be Powell and Jobs, I think, is going to be the selection for this week. He's either going to give me a decent dollar rally to sell into, or he's going to give the pivoters something to grasp further and send dollar lower and yields lower.
Okay, so you would like to, you know, him to sound hawkish and they take the dollar down. Which pair would you gravitate to on weakness?
On dollar weakness, well, I'm looking for dollar yen to rally up.
Okay.
If we get a decent, well, depending on where we are, if we get a move to sort of 140s, 140 plus, I think I was looking at 145 before we moved all the way back down. Yeah, any decent dollar rally, I think it's worth getting into. I know you mentioned PCE. I can't see that being a surprise different to what we've got out of CPI.
Okay.
I really can't.
Okay, so then maybe we'll have initially some yen weakness on that.
Yeah, and then obviously we've got, and then we got Jobs after that. So you could get a nice rally, in the dollar and then a crappy jobs number and it goes all the other way, or you get a decent number and maybe the dollar rally continues into the end of the week and then gives you better levels to sell it, or gives me better levels to sell it.
It's a nice idea to pay attention to going forward. Thank you, Ryan.
Cheers, mate.
Stell, how are you today, buddy?
Good morning, everybody. Good morning, Vietnam.
Football go okay for you this week?
Yeah, I'm not following it that much. I'm not following it that much this time.
Okay.
I don't know why.
All right.
Yeah.
Too commercialized. Qatar.
No,
Greece won in it.
Your ballet lessons are.
I used to follow it a lot. I used to bet on games when I was in London, but now I'm like, I don't know. Maybe I'm getting older. Yeah, Greece is not in the World Cup. That's one of the reasons why I'm not following it.
All right.
Good thing for the World Cup.
So markets, I agree with Ryan. Obviously, we've been talking about. I almost said Bernanke again. Jay Powell on Wednesday, and I said Bernanke on the Flow Show. I don't know why.
You've been reading his book or something.
Yeah, and payrolls on Friday, and I still think that the risk is bigger for a disappointment from Powell, especially seeing yields retreating so far now. 366 in 10-year. This is down from 430 something that we got the highs, and I really think that it's more likely that he's going to disappoint. And I think the pain trade is now going to be for bonds to go lower, so yields higher, dollar spiking a little bit, and risk getting sold. Having said all that, of course,
risk is getting sold before there's even a bip higher in the 10-year.
I'm
wondering what it'll do if it's selling off in advance of that, and then we should probably just add jet fuel to it. I know Steve probably has an opinion. Was this enough, Steve? We're at the 200-day here. We're at the 200-day here as a two-pat to be able to sell the 200-day MA, thinking it's going to work like it did back in August.
We're definitely testing the first important area of resistance. If we break through that, we have the descending trend line resistance that you have on your chart. From a risk reward perspective, it makes no sense to chase up here, because as we've said before, and Stelios just repeated, I think there is a very high probability that Powell is not going to give something that market participants will like. So I think there are big risks to see more downside for the S&P and in general the stock indices from here. Some of them have run a lot. For example, if you have a look at it's one thing having a look, for example, at the S&P, but for example, if you have a look at the DAX, you'll notice that the DAX has had a spectacular rally. For example, the DAX has already retraced more than 60% from the all-time high, from the move lower from the all-time high. So I do think that indices are have a very big risk here for a move to the downside, at least temporarily, if not more than that.
Well, I mean, I wrote over the weekend that 20 VIX has me concerned, because that's extreme complacency.
Given the outlook at the moment and the fundamental risks, I totally agree with you. VIX at 20, taking into account, all the things that are currently happening, rates having substantially increased, economies at the very least slowing down, if not in recessions, the companies in general reporting worse earnings, etc. I do think that VIX at 20 is a very low level.
How about 22? That's where it is now. What's the difference, huh?
Tomato, huh?
I was talking to a trader friend of mine, and I brought up that point. I go, makes me nervous that there's so much complacency. And he said, who else said that today, Dale? I said, no, who, Jimmy? And he goes, Art Cashin says the same thing. So us old fogies, Art and I, dinosaurs, notice stuff like this. So it's actually a compliment to know that I was thinking along the same lines of a guy who has that.
You can add me to the list of dinosaurs.
Huh? Am I
you can add me to the list of dinosaurs.
All right. Anyway, I'm a brontosaurus. Put on a few pounds. I'm not a T-Rex anymore, guys. So don't worry. Don't have to be afraid. Crude.
Sorry. I think of Dale as a
brontosaurus.
Yeah, or just what's the name of the plant eating dinosaurs? I can't.
Oh yeah, brontosaurus.
Is it? Well, no, I mean the
plenty of them actually out there.
Anyway, I'm sitting here just giggling myself.
Glad to entertain, Blake.
Yeah, I mean, and good morning, everybody. Good morning, team. Good morning.
You're a T-Rex. Yeah. You're a T-Rex, man.
I am not. I'm far from a T-Rex anymore. I'm like I don't know, a Stegosaurus. I don't know.
Oh, yeah,
anyway.
Yeah.
Anyway, let's get off this. And I wanted to talk about this weekend. I mean, the first thing that happened when we were in our chat rooms, I was popped in there yesterday afternoon, and the first thing everybody's like, why are futures down? And I'm like, man, there's a massive, if you guys didn't catch it, there's massive protests in China over the weekend. So of course that we're going to be down, and you see the Aussie dollar, down, gapping lower. You have the Chinese markets were dragging lower overnight. I mean, what do you guys make of this big move happening out of China? Because we have recovered a little bit. I mean, you can see how the Aussie dollars bounced back. S&P futures, they're heavy. They're heavier, but we have bounced back a little bit. But what do you guys make of this move in China? I mean, I'm just gonna say, first off, that whatever's happening in China right now, I'm not too terribly worried about it. It's not. I saw a lot of people on Twitter like saying, "Oh, this is a communist country," and you're gonna just see all these protesters just disappear, and everything's gonna be gone, and then you're gonna go, "What happened with that?" I don't necessarily fall into that category. I do think that China is going to, they're not necessarily going to listen to their people, like, we're gonna bend the knee to the people. But remember, China is trying to really become the number one superpower in the world, and I think because of that, the way that they change their policies is going to be a little bit more pro economy type of moves in the months to come, especially regarding COVID policy. And I think that you have to brush this off and use it as an opportunity to buy or play China the long side, like if you would on any dip. That's my opinion here regarding China, and that's why that I think that these moves that you see, and whether it's the Aussie, here's a good example. The Aussie yen broke lower over the weekend. We were developing this triangle pattern. We had rejected the 618. If you guys follow ForexAnalytix, we've been following this ascending channel for like months in the Aussie yen. Well, we broke lower, and we're nearing channel support, and you can see we're at the 200-day moving average. I think you got to use this opportunity as a buying opportunity for like currencies like the Aussie yen, and I want to actually be a buyer, probably sometime, either tonight or tomorrow in the Aussie yen as we approach 92. And I'm using this as an opportunity to get on the long side. But I'd love to hear what your guys' views are on, China's COVID policies and these protests. And and you know, the lockdowns. I think that they're going to eventually ease, and you know, that's going to be bullish for China. So anyway, let's start with that. So what are your thoughts? KMan, you trade a lot of the Asian currencies. What are your thoughts? Let's start with you.
I think it's going to get worse before it's going to get better over there. So
okay,
I'm still keeping base long dollar China, and I'm trading it around. I think we could see levels of 730 again. Yeah, I mean those yen crosses. You have two things, right? You have on the Aussie yen, for instance. Yes, you have a part of China in there because it's China trouble. You will be sending oil lower, commodities lower, and then the Aussie will get sold, as we've seen, coming up from the highs. 67, 70 down to 66s now, and dollar yen got sold because of the uncertainty over the US yields. So yeah, if you think it's a storm in a glass of water, then it's probably worth looking at some yen pairs again. But I think as for what China is concerned, I think those not only those protests, but they've also seen the PBOC needs to come in, the government needs to come in. There's trouble at all those factories that can't function properly. So I do think it can get a little bit worse before it gets better again. So, but personally, I'm really expressing it versus in the currency that is directly impacted, which is the CNH.
USD CNH. All right. Well, Ryan, what are your thoughts here?
Yeah, pretty much the same. Been long dollar one since 706 and 704, and I think it's got more upside potential than downside. Obviously, you've got to watch for any official chatter. I mean, state banks stepped into Chinese stocks last night as they were tanking. So you always got to watch out for comments if trading the one. If they turn around and say we're not going to let this weaken too far, that's probably signs of a top. But yeah, for I still think the path is high for that. China is struggling, but you never know what they do.
And that's the thing. And like I see Eric saying they're not going to listen to the protesters. Look, I don't think they're going to listen to the protesters. I don't think they can give a shit less about what their people say, to be honest. But they care about the economy, and China's economy is really struggling, right? Yeah. I mean, they're gonna reopen China. Hold on, Steve. They're gonna reopen China because if they don't, their economy is gonna fail. They don't care about the people. I'd hate to say it, but they probably don't, right? So, Steve, can Ryan finish his thoughts, and then you can feel free to go.
Yeah, well, no, not much really to add. You're right. But then there's this thing, what is open and what is not open. They cope well now, better with things like ports and manufacturing. It's a last resort now to shut down factories rather than a first resort. So yeah, and it's obviously good if they do keep things open. It's good for the global economy as well. But from a trading perspective, as soon as you get bad news in China, you see commodities come off, you see risk come off, and there's not a lot we can do about it, really.
Yeah. All right. Well, Steve, what are your thoughts here?
I was reading an article yesterday that was showing that China is actually editing the World Cup, broadcastings. You've seen that, of course, they very frequently, when there is like some dead time, they're showing fan reactions. So they're editing those out, and they're zooming in on players or whatever, because they don't want to see people there to be seeing that there is like a huge audience, that nobody's wearing a mask. So that tells you all you need to know about how they're trying to manage.
I mean, Chinese people are not stupid. And they have access to more technology than the rest of the world. So I don't believe that at all. And if they do, it has zero effect. But
that's not true, because what you have in mind is
it would be something if they were broadcasting it in North Korea. then I get it.
But
China's
also you have to keep in mind that from the 1.5 billion Chinese people, not all of them like live in cities and have a good education level. You understand what I mean? So yes, you cannot fool like the newer generation, smarter people, etc. But there are people that are still, live in more rural areas, have a very low level of education, and they just eat up whatever they serve them, right?
I mean,
now
the
having
thing
to do
is,
with
that's why they have protests, because people are like,
Yeah.
hey, we're not stupid, asshole. Open up
yeah,
the
yeah,
damn
no,
country.
I don't disagree with you. Now, another comment having to do with that is that in general, people have to keep in mind, of course, this is not something that you can predict in the short term,
Yeah.
that if the ability of a communist regime to keep people in check was indefinite, then the USSR would still exist. So would many other communist regimes around the world, which have all fallen.
Yeah, right. And I think they very well understand that. Paul brings up a great comment. And Dale, you remember your guest that you had that was the British expat that was in China, right?
Yeah.
That was an awesome interview, by the way. Absolutely awesome interview. I thought it was so cool. I'd love for you to bring that gentleman back. I forget what his name was, but Paul brings it up. Don't forget Dale's guest last month, who lives in China, who basically said some things we hear in, outside of China is complete bullocks, China related, obviously. And that's, I mean, that I couldn't agree with that more. I think that's a great interview. I wish
he was happy there.
Huh?
He was happy living there.
Oh, very happy. And he's just like, the stuff that you guys hear is complete crap.
There is a lot of misinformation. There is no question about it, right? And
well, take it from somebody who lived there.
Yeah, in a big part, that also has to do with the fact that China is a black box. So it's easy for misinformation one way or another to travel, right? So that is my constant argument whenever Dale is asking me, what would you do with that or that or that whenever it's connected with China? My constant answer is, something, for me, China is a black box, and I'm just staying away from it. Because of what you just said.
But we're all forced to deal with it in the market. So
in some extent, yes. But I'd rather avoid.
So we have to figure out how to navigate around that. So Stelios, what are your thoughts here regarding China? I mean, you have an opinion, or you're gonna stay World Cup agnostic, China agnostic, markets agnostic? I mean, what's your
it's
opinion?
very difficult to gauge what's happening and what we've been told, what's been reported. The thing, though, is that you're seeing more and more protests now, and that's a little bit different to how it used to be. So you're seeing more and more protests. So I don't know how it's going to end up, what the end game is, but it's a tough one, man. I really don't know. Sorry, I can't help. I'm completely useless on China. Sorry.
One of these days, I'm going to pull an opinion out of
Why
you.
do we keep this guy in the company?
I know, man.
All right, Dale. What are your thoughts, Dale? Now I want to hear from the dinosaur himself. Just kidding, Dale. Based on the conversations we had earlier.
I interviewed a guy who said they can't reopen. I forgot his name. Very well followed guy, but
yeah,
that they're just never going to be able. They just can't reopen. But China took us out of the recession in 2008, 2009. So if we ever start to slow down and have this Fed-induced recession, we can't count on China to pull us out of it. In fact, they may drag us into it, the global recession. So.
One thing is for sure, and somebody doesn't have to be like an expert on medical science or whatever to realize that, is that if they stick to some kind of a plan that the zero COVID policy kind of approach, they're never going to reopen, right? COVID is never going to go away. End of story. That's it.
Yeah. So anyway, I think
it's Dr. Grouchy. I mean Fauci.
It's a really great conversation, and remember, China does affect everybody.
Green, yes. That was
It
it,
affects
Mike
everybody
Green.
and what we do in the market. So you guys got to keep your head on a swivel, especially on, I mean, you see like the protests over the weekend that really has affected markets. Now, I'm just going to say,
Just buy Bitcoin and don't worry about it.
That's right. Let's just get long Bitcoin. As long as it's above
close.
15,000, we're getting long for a move to 1 million. I'm joking.
Used to be a very
that.
important market indicator. Not so much at the moment, but
I don't know.
Canada just printed a horrible current account balance negative 11.1 billion,
Oh, wow.
with the previous one being positive 2.7.
Right now there's the Canadian current account, and the dollar CAD had a little bit of a move. Hey, just really quick, guys, I want to say that if you want to, and I'm just going to show you, this is our chat room. All right. If you want to be part of the ForexAnalytix community, one of the best ways to get involved here is check out the trader funding program, so you can figure out how to trade our money and not risk your own money. All right, but I want to just show you around the chat room a little bit. This is our general chat room, okay? And I'm just going to show you from when I got up this morning. I got up somewhere around here. It's been a very slow morning, so you can see where I said good morning a little while ago. But then you can go over to like the trades room, and you can see like I've placed a few trades. These are the ones that I closed out from overnight. And if you want to go back and see when I opened them, just scroll back into last week. All right, into the trades room. It's not just myself. You can see people like KMan, Ryan, different traders are through here. And you can see these are positions from last week when I closed some euro dollar longs and dollar Canadian shorts. Reason why I show you this is because you can, stay up to speed with what I'm doing, or with, other people from the ForexAnalytix community, but it's more so you can have ideas when you're utilizing, like the trader funding program. You're trying to pass an assessment. You have ideas. Doesn't mean you have to mimic trades that I'm doing or what everybody else is doing, but this way you have trading ideas. So you're not just out there alone, and you have a community where you can talk to. You can talk to other traders inside the community. So make sure you check out that and try out ForexAnalytix. It's only $1 for 10 days just to try it out. If you just, you don't want anything to do with the, you trade your own money and you're fine with it, then check out ForexAnalytix so you can be involved in our community. And we have a great World Cup conversation that's happening right now. It's been happening all like this. There's chatting in here nonstop just about the World Cup, because obviously traders are from around the globe. So, and that's just a discussion. We'll remove it after the World Cup's over. But our general chat room, our Flowonomics room, where we have macro ideas, where that came from the Forex Flow guys. So anyway, great place to be. Hope to have you there. And Dale, I think it's time for your interview, right?
Thank you, Blake.
All right.
Thanks,
guys.
team.
Thank you, Dale.
All right, everyone's
Cheers, guys.
Everyone's got
Bye-bye,
a
guys.
nice picture going into today and the rest of the week, and it's our pleasure to bring in Andy Conson. Andy, how are you? Welcome back to F.A.C.E.
Hey, thanks for having me, Dale. I appreciate it.
Yeah, so Andy, what's top of mind for you? I know a lot of people, the PCE, or do those things even matter with the way you approach the market?
Well, I'll put it in context, but the thing I'm looking at most carefully is what Powell has to say. I think it's important data point, and we've gotten a lot of other governors speaking, which is indicating, and the minutes as well, indicating some sort of divergence amongst members. But
do you want to share your screen, Andy? Do you have anything you want to visually share with us, or?
Yeah, let me set that up
at the bottom. And while you're doing that, Andy, confirm my memory. Last time was the first time you were on.
Yes.
And at that time you were bearish equities, I think was in August, and you were also bearish gold from, sharply higher levels even after this rally that we've had here.
Yeah.
Do I have the right guy?
Yes, but my position's changed quite a bit. I would.
Well, I know. I mean, I'm sure it did, but they worked pretty big.
Yeah,
because I remember going.
We
That
had
was a great call by you, huh?
We had some good luck. Let me.
You humble.
What I think is
you humble son of a bitch. You.
What I think reflects some of my calls best.
All right.
So this is. So let me step back and say the important things that are on my top of mind when I invest, and my horizon is 1 to 3 months typically, is by far the biggest thing that's driving markets has been shifts in risk premium, driving all assets, and in particular, starting back in December when Powell mentioned the balance sheet. QT drumbeat started to get front run, and you saw a significant sell-off in all assets. And this graph is a portfolio of assets that's balanced to growth and inflation, things like an all-weather, things like, it's not that different than a 60-40 would have performed, but, is more comprehensive. And so what it reflects is that people don't want to own assets, they want to own cash. And it's been going from the upper left to the lower right through November 2nd. And let me just move this to the right thing. I updated the graph this morning and it's not perfect. So those flows depend on how much quantitative easing is done, and then how much issuance is done, and recently how much quantitative tightening is done, and that transmission mechanism is the issuance of government securities by the Treasury. And that headwind has made people not be interested in owning assets, along with hiking, which has generated an attractive place to park cash.
Money. Yeah.
Right. So those are the big flows. And now the question is, where are we on the wiggle? And I've had some good fortune in catching some of those wiggles. Greens are buys, reds are sells. But I missed it in when the inflation number hit. And since then, I said we should sell because of some data I saw regarding the massive amount of issuance in Q4 and Q1 that came as a surprise to markets. But the CPI number changed things. Yeah. And so if you look at the far right, where we spiked up massively, 2-4% or so.
That was a 7 sigma event. Can you define that for our audience? What is a 7 sigma event?
I didn't calculate the actual sigma, but a 7 sigma event is something that should not happen not the I think the world's lifetime, but certainly civilization's lifetime.
And that's happening. So what's that tell you about the markets when that can happen?
Right. And so the question is why? Why did we have this rapid spike post CPI? And so what I'm looking at first is, well, let's see what happened. Well, bonds are up 10%, long-term bonds are up 10%, SPX is up 8%, gold's up 4%. Half of the rally in bonds was seen in real rate rallies, where both inflation expectations and real rates fell.
Dollar's down 10%. So is it all nominal? Is it all nominal on the dollar break?
Yeah. So
it could all be nominal then, these gains.
Right.
All right.
And then commodities are down. And so how does that all add up? So first you have to say, in a world in which bonds are up, the most natural thing to look at is recessions getting priced in. And I think that's the broad narrative, that we're now heading toward recession and the Fed is going to ease in some way at some point. But as I reflect, the difference between here and here in the 1 year the next year worth of rate hikes as priced by Fed funds is really unchanged. Briefly, a lower terminal rate got priced in, but then soon after, the market started fading again, 2-year notes faded, and really nothing is priced in that would indicate the Fed's path changed based on the CPI number, which I think is an interesting insight that I'd suggest people take a look at. What
We were talking about that today, the 10-year, the action in the 10-year looks a bit corrective, and one negative number, one word from Powell, and all of a sudden you could see new highs in the 10-year at 440, 450.
Right. Which
is that what you're thinking, Andy?
I'm not thinking that high. I do believe there is a potential for a significant backup in yields, but I'm short the 10-year. So
that's contrarian right now.
Yeah, and I shorted it basically in here. And so 113.10, I think. I used options, so I don't have a price precise thing. But I think the question that one has to ask is this recession being priced, or is this a massive short covering? And so most of my work over the past 2 weeks has been trying to identify who did the buying. And are they long, are they flat, or are they still short? Because I think that's important in terms of positioning.
More fuel, more fuel for the market to squeeze.
Right. And so the most obvious characters that took bonds and stocks up are the CTA trend following in the bond market case, and the what I call portfolio insurers, which use no one cares to buy equity puts anymore because they've performed generally badly. In down markets, you actually see down volatility and underperformance of the hedges versus their costs. So many have shifted to traditional, and I'm a dinosaur too, traditional 1987 portfolio insurance where they chase price. And on my site, on my Twitter feed, I show that graph. I don't have it here.
So was this performance anxiety? All the money managers, hedge funds had to come in and show these names into year end to keep their accounts?
You know, I think so. It's an interesting thing. There's the general idea of performance anxiety, Santa Claus effect, all those names for it. And this is an unusual year in that long-only portfolio managers that, or even net long hedge fund managers that are, long short, which all still have a positive, market exposure. None of them are getting bonuses based on performance. And so there's not a lot of incentive for performance chasing, because all you end up doing is marking up your portfolio for no bonus. So that mechanism, I think, is a false flag in years, and it's very rare that you have years that are down substantially. And in none of those, again, very few cases, but in none of those cases do you get a Santa Claus rally.
Did you find that there were still shorts left after that event?
Right. And so the important thing, I think the equity move is less interesting, except for the fact that, so let me just step back. If the bonds went up, stocks should have gone down if they're pricing a recession, but they didn't. They rallied as well. So let's start with the bonds. The bonds seem to have gone up, not because of new longs, but because of the unwind of existing momentum-driven shorts. And so in bonds. So that seems to be the root cause, because, as I said, the Fed's hiking path hasn't changed at all. QT hasn't changed at all. Yes, we're getting closer to a terminal rate, But to like long bonds or even 10 years at this yield, you have to think we're going into a recession by 2024. And if you think that, it's hard to like equities. So I don't think both of these things can be correct. The bond rally to me is a short covering rally from these CTAs. And if you look at their performance on the day of the CPI, and subsequently as the bond market has extended, their losses have gotten smaller through time, which is consistent of position flattening. So my observation is that CTAs are mostly done and aren't going to buy bonds. And the equity flows are just performance, are just portfolio. They are mechanistically, when the market goes up, they buy, and when the market goes down, they sell. And they have significantly levered up. Let me just briefly bring that chart up.
Interesting. So who are these people? Would you call them institutional buyers?
For equities?
Yeah, for equities.
Yeah, so my favorite, again, I use many metrics, but this is a rough one that I find useful. And if you look at this chart, what you see is a, for the
You know, we're still looking at the same chart here, Andy.
Oh, are you?
Yeah.
Let me, new share.
One of our attendees, I thought we were still talking about it. It's Monday.
Yep.
But we
here
understand
we
what
are.
you're saying.
You see this? You see this Bloomberg?
Got it. Yeah.
Okay.
Got it.
So if you notice, for all of the first quarter, they sold. These are long only asset managers that self-define as being unlevered. So it's your average portfolio, pension portfolio, insurance portfolio, or mutual fund portfolio. And so they sold all the way down to the lows. And now I don't have the SPX next to it, but we know the lows in March. Then they bought into the massive rally that ended on March 31st. Then they sold all the way to the June lows.
Yeah.
So they chase price. And as you notice, they make the lows and then they reverse. And so they've been chasing price for, and are quite levered relative to the August high and the May high, the May high.
Yeah.
So my sense is these guys are the ones that have driven the equity rally that paused briefly when the Fed spoke, but then relit soon after. And I think those guys are what are driving the equity rally. So
when you say levered up, they're doing it on margin?
So, you know, these are long only funds. So what they do is they're not levering up, but they have, they always keep some percentage of their portfolio in cash, which they can use to buy margin futures.
I see. Okay.
And so, I think we have seen both of those things happen. CTA covering, which doesn't really create in the bonds, and equity managers re-levering. So when you add those two things up, this is not a Fed easy money thing. This is a animal spirits chasing thing. And I think the narrative is just wrong on whether what's being priced, because
well, what's being priced is peak inflation and a 20 VIX. So before today's opening, let me ask you, do you feel more comfortable with the shorts in the notes rather than shorting this rally in stock indexes, and why, if so?
So I have a, right now, I have a short position in notes and a short position in SPX and NDX.
Okay.
I'm a little bit more constructive on the dollar. I'm long the dollar versus pound and long the dollar versus Nikkei.
Sorry. Okay, why the pound rather than euro?
So I think the UK economy is closer to what some have labeled a developed market currency crisis, where they have great demand in the capital markets for issuance, and they also need to import a hell of a lot, and that's pretty negative. And I think let's speak about bonds and the Eurozone. The ECB is the most behind the curve of any central bank. And so I think there's going to be a significant catch up there over 2023. And that's why I'm particularly negative on bonds, and actually think equities in Europe will actually outperform bonds, just like bonds, just like
because the euro is going to remain somewhat strong against the dollar. Could that be it? Just the denomination?
Yeah, possibly. But I think it's really just financial conditions are still too easy in the Eurozone and need to tighten. And while they're easy, that's a sweet spot for equities. And really, it's not to say that I'd go long equities. It's just I think bonds will significantly underperform European equities. Similar to the way the U.S. bond market has massively underperformed the U.S. equity market in 2022. I think 2023 will be a similar. 2023 in the U.S. will be a convergence where bonds will outperform equities, but in Europe we're behind, and I think bonds will underperform equities in the Eurozone as they catch up.
Wow. I'll tell you, Andy, you sure provide a real nice picture across the board assets and the reasons. You do a lot of detective work, and you know, and
I may not be right.
Huh?
I may not be right.
Right, of course. Who's always right, Andy?
Right, exactly.
You know, I mean, we don't expect our guests to, you know, always be right, but the insights on the bonds being short covering, and that you're constructive the dollar, which a month ago that would have been a consensus view.
It was
right?
super crowded. The work I do, that's detective work on that, had me being so the most crowded pair by far from my work a month ago was pound dollar. Everyone hated the pound, and positioned that
it's going to go under parity, and we had a major bout.
And that rally did not surprise me. I didn't catch it, unfortunately, but that imbalance of positioning has massively reverted. And so now I think it's more about the fundamentals than the positioning. And so I'm more bearish on the
backdrop.
The UK fundamentals.
They've had 7 presidents in a few years.
Yeah, exactly.
Right, that too. Can you imagine, Andy? So, you know, I want to wrap it with this one question. Based upon your view on the notes and that yields could rise again, do you have a view on US dollar yen? Because there was, up until recently, a pretty tight correlation with yields and US dollar yen. Do you have a view on that?
Yeah, and it's just about central banking. I think Kuroda is going to do what it takes through April. Obviously, who takes his place is going to be an issue, but also the fiscal side is finally stimulating, and a combination of the U.S. getting tighter and Japan getting easier is likely to be bullish dollar yen.
Okay. Andy, what's the best place for people to follow your work? I know you have a private Twitter where you keep people in touch with things that are changing. What's the best way to do it?
The intro to me is my at Damp Spring, which is my Twitter handle. I have a lot of followers, but I also tend to be extremely approachable and answer lots of questions on that public feed. I do have a private feed that's a subscription model that right now is at capacity of 250 members, and is has basically a 200-person wait list. So join the wait list. It does open up on occasion. DM me if you
get some more bandwidth. People are clamoring and they're riding in the streets to be able to get in.
Yeah, it's a blessing, but I do offer a lot of value and a lot of personal hand-holding and education on that site.
Okay, last thing, gold. You made a great call last time. Are we entering what could be a window if we had one more break in gold to back up the truck?
So gun to my head, I think gold is I think I'd have a hard time with a gun to my head making a call on gold. I honestly don't have a strong enough view to say whether it's up or down.
I don't, you know what? Try this. It's very cathartic. You probably don't say it much. I don't know.
I do say that. I was trained in Bridgewater, and that's all we ever say.
Yeah, all right. Well, I'm just saying that, so I remember when I was younger, I had a hard time saying that because it's really wisdom to say you don't know.
It's the best. It's the best energy you can have. If you know you don't know, you are you have a superpower.
Oh wow, I really feel I've gone through a metamorphosis today. But Andy, eye-opening, some great ideas, very nice narrative, and we all appreciate you coming here with your giving spirit and sharing this work. I know you put a lot of energy into it, and you have many years of being a market participant and a market watcher. So
thank you, Dale. I appreciate the opportunity. Anytime.
Yeah, it's great. So I'll get a hold of you later and keep you going in the rotation, Andy. And I wish you and your family a happy holiday season.
You too.
All right. So
thanks,
everyone, Andy Constant, follow him at Damped Spring, DAMPED Spring. Should be part of your intelligence gathering. He does great macro. All right, so that's a wrap, and you could join the team in 18 minutes on the Morning Edge. Remember, everyone, don't just count your pips, count your blessings, and we'll see everyone for Turnaround Tuesday. Adios. Thanks again, Andy.
Thanks.